Hey, thanks for tuning in. For those that are new to the channel, I'm Boy the Dip, and hopefully this channel brings you some value. The topic for today's video is investment strategy. If you're new to the space or just having difficulties making winning moves, this video might just be for you.
All right, Dip, you and I have different strategies when it comes to our portfolios. I think I'll go first, let everyone know the way I do mine. I look at the hot topics, what they might be, the niches, if you will, the different categories. I like to pick a few coins that I feel will excel in those categories, and I'll do my research on each one. My portfolio this bull market consists of projects from 4 different categories. I'm going to be picking from AI, gaming, layer 2s, and of course DEXs. First, I'll go over gaming. I think gaming is going to be one of the bigger ones of this bull market. From early on, just from the way last bull market ended, you could see that gaming was really starting to take off. And I think it's going to continue this bull market, and so far it has. So what I do is I look for projects that are builders or launch pads for gaming, as well as established games that will continue to evolve through the bull market and improve and become mainstream on Web3. Secondly, AI seems to be all the rage. It would be irresponsible to not have some kind of exposure to AI projects in the space. It's going to be part of our day-to-day lives, which it already has with ChatGPT and a few others out there as well. It'll give us the tools to be better and more productive in every way. Yeah, if you decide that's a good thing or a bad thing, that's completely up to you. But when it comes to the crypto and my portfolio, I believe it's going to be one of the bigger gainers in this bull market. Layer 2s, I think, are going to be big again because as popular as Ethereum is, obviously a lot of developers are building on it. The gas fees are still way too expensive. I know Ethereum has an upgrade coming pretty soon that's supposed to cut those gas fees in half, but you know, the way they've been in every other fork that they've had, or sorry, update that they've had, it still hasn't worked out very well. So I think layer 2s like Matic will help the cost effectiveness, like the lower gas fees, and of course the speed. A few good ones to look at are Arbitrum and Aurora as well for the Near protocol. Another one to watch out for in this bull market, I think, is going to be payment systems. We mentioned this in a previous video with the ISO 20022 tokens like XRP, Quant, and HBAR. I think those are going to be big this bull market as well, because going forward with financial institutions in TradFi, payment systems are going to be the way to go, and to adopt crypto and mainstream finance, payment systems are going to be important. Finally, I will allocate a small amount into smaller microcap coins. I guess you can call these diamonds in the rough, you know, kind of long shots. I won't allocate a lot of my portfolio into that, maybe just a couple of percent. Another category I think I'm going to allocate some of my portfolio to are decentralized exchanges. Binance, Crypto.com, Jupiter, there's a few on some of the bigger chains, and they all have native tokens. For example, on Crypto.com, you have Crow, on Binance, you have BNB, and on Jupiter, you have Jupe. I think these ones are going to be big in the bull market because people need to use these decentralized exchanges to swap out their tokens. And of course, by using that, they collect the fees, and of course, it's going to bring the price of the token up. So I think that's another small amount of an allocation to my portfolio that I'm going to have. One of the DEXs I believe is really going to be the cream of the crop, I believe, going forward will be Crypto.com. Binance has had their issues with the SEC. Coinbase keeps on going down lately, especially when the volatility is pretty high. And Crypto.com and their Crow token, I think, has been really, really good. They've been steady. The exchange has never gone down. They are going to be a huge contributor to the space. As well, they're being adopted in the real world big time because they have sponsorships through the UFC, and you see the Crypto.com arena. So I think they're going to be a huge part of this next bull market. Anyway, that's just a quick rundown on my portfolio, my breakdown. I didn't really give any percentages. I'll leave that up to each individual. But like I said, the AI and gaming are two of the biggest sectors in the space that I believe are going to do really, really well this bull market. Okay, so to summarize my portfolio, or at least my allocation, I'm going to be looking heavy into gaming, AI, decentralized exchange, DEX native tokens, and of course a little bit into payment systems like XRP and HBAR. None of this is financial advice, obviously. Do your own research on everything before you invest, and make sure you allocate wisely. So that's pretty much my rundown. I know yours is going to be a little bit different than mine, but so tell me a little bit about your portfolio strategy.
Thanks, Crazy. I have a much more traditional approach when it comes to investing, coming initially from the traditional side of the markets. First thing I want to say is, regardless of where you're starting from, discipline is of number one importance. If you have $1,000, don't just jump into what you're investing 100%. Leave a little cheddar on the side. Only the Simpsons can see the future. So jump in 50%. If the market corrects on your initial investment, then there's something there to take advantage of and lower that entry price. Increase the chances of you being in profit from the start. Once you're familiar with your portfolio value, then you'll know whether to wait or jump in on an opportunity right away. I'll start out with how traditional investments are allocated and then go over my crypto allocation. In general, across the board, I personally use an 80-20 rule. The traditional investment side, I like to keep 80% of my holdings in broad market ETFs, mutual funds, and GICs. The reason for this is they all pay out a dividend or interest on the investment. This provides a solid, consistent compounding effect in the portfolio and consistent increase in earnings over time. The reason for the broad market investments is that it diversifies your portfolio across all sectors and is generally a 60-40 split of equities and bonds, removing a ton of volatility from your portfolio, especially at times like we have seen recently with a ton of mismanagement at a government level. Money printing kills economies through inflation regardless of the rationale behind it. All these funds are professionally managed by asset managers, removing the need to be constantly managing my portfolio myself. I just live life and let the guy in the suit watch the charts, read the news all day. I just have to make the initial fund weighing decision whether foreign or domestic investments, or whether the fund will be weighted heaviest to a certain sector of the market, tech, real estate, industrial, etc. The other 20% of my portfolio is where I hold individual equities. This is for the long-term holds of your top earning companies, the Apples, the Amazons, Teslas, Nvidia type earners off the top of my head. The traditional side makes up 80% of my portfolio, and the other 20% that used to be precious metal investments is now crypto. The crypto side of investments is allocated similarly to the traditional side, with 80% being in Bitcoin and the other 20% in altcoins. Diversify the alts through their different sectors, utility tokens, gaming, AI, media, etc. The Bitcoin is the golden, sexy, fixed supply hedge against inflation, and the alts are the speculative investments that would represent the new tech pre-dot-com style investments, where most fail, but ones that succeed or be like buying Google at $3. The main difference on how I manage the crypto side versus the traditional is completely dependent on the market cycle as a whole. In a bull market like we are seeing now, it is important not to be married to anything and let the volatility do the work for you. Constantly be dollar cost averaging in and out of the market. You get a big pump, then sell a portion of your holdings and then sit on it. And then when you get that big dump, buy it back up while everyone else is getting wrecked. You're generally making plays countering market sentiment. People are getting greedy, bullish, euphoric. The market will capitalize on that. People are getting scared, angry, bearish. The market's going to take advantage of that also. And by taking advantage of those trends, you get exponential gains on your holding. The goal is to be 80% out of the market by the end of the bull run, whether in stables or cash, waiting to buy up max pain at the bottom of the market. Then you just wait for the next run up. Bear market plays are a little bit different. This is when I take a page out of my traditional strategy and utilize what's available in the true DeFi world. Put the holdings to work through staking or providing liquidity through liquidity pools and lending. Capitalize off that interest, essentially compounding the holdings I have at the lowest cost possible with the lowest amount of volatility in the market. By educating yourself on market cycles, taking profits when the going is good, buy up the good projects when nobody wants to touch them, earn off the hard work and development when the market is quiet. With this strategy, you've easily more than doubled your bag going into the next bull run to take advantage of those 5, 10, 50, 100x gains. Everything is about constant equity growth and in turn improve quality of life versus the constant squeeze of inflation participating in that fiat world. Investments grow when the fiat world prices you out, and cash comes cheap and easily with equity. Be disciplined and patient, stick with a plan, wait for those moves, and don't let emotions dictate your decisions. The investing world will reward you beyond belief. If you learned something from this video, please subscribe and drop a like on the video, and tune in to our live stream every Thursday at 7 p.m. Eastern. We are trying to build a no-nonsense crypto space where we can all learn and share with each other. Hang out, talk crypto, without all the cross-eyed looks you get from those normies. Cheers, see you soon.